Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. It is Judgment Day, folks. It's Fed Day. We're finally here. We made it. We'll talk about that. We'll talk about earnings, Apple, AMD, GE, Spotify, solar stocks, everything. I think Dennis said 200 earnings reports today. We'll try to cover as many of those as we can, though I doubt we'll get to all of them somehow. Our guest today, Mike Olson, will join us at 8:35. He's Managing Director and Senior Research Analyst at Piper Jaffray. He'll break down the Apple report for us and some other stocks in his coverage. In the meantime, Joel, what is happening here overnight?
Apple's helping us be in green here by 6 1/4 handles. Pre-market high 320.75. That's just below your close from Monday. Pre-market low 3013.75, and that's above your close from yesterday at 12 1/4. Crude in the midst of a 5-day winning streak, up 44 cents at 58.49. Gold in the green by $1.20 at 14.43. Silver going in the opposite direction here, down 10.3 cents at 16.45.5. And Bitcoin still doing the 10,000 two-step here, up 175 at 9,910. Let's bring in our clean-cut co-host here, Triple D with the new do there.
Look at this hairdo. Here, I'll take off my headset. Look, it's all short.
Yeah, boy, oh boy.
The summer hairdo is finally here because it's approaching August.
Yeah.
Got rid of the mop just for you guys. It was getting a little bit out of hand. I was actually getting hair in the mic, so I had to get rid of it.
Okay. All right.
Like Joel now.
Oh, yeah. I got a clean cut. So we are just going to be really focused today, and we are going to do every one of these earnings reports.
200. We'll do like one earnings report. What do we have? We have 60 minutes. We have to do one every 20 seconds.
Yes.
Go.
Wow, I wasn't
just wasted the first 20 seconds.
I wasn't ready. You want to
I wasn't ready. You're gonna be ready when you get 200 reports.
I guess we'll start
alphabetical order with Apple.
We'll start with Apple, and we'll leave some of this discussion for when Mike joins us in a half hour here. But we'll give you the headline numbers from Apple yesterday. Q3 EPS, they beat $2.18 versus a $2.10 estimate. Sales 53.8 versus $53.4 billion. So beat and a beat. The headlines, though, for Apple, two numbers. The Q4 sales was good. They guided $61 to $64 billion. 61 was the estimate there. So some good Q4 sales guidance. Services revenue for the third quarter, all-time high, $11.46 billion. And those are your headlines. China sales were the only international market in which they were down year over year, but Tim Cook specifically cited those as a highlight on the conference call. So Tim Cook citing China, good revenue, services revenue, and good sales guidance for the Q4. That's the headline in Apple.
Chopped around a little bit on the report, got initial lift, then it sold off a bit down to about 206, I believe. And then we started just climbing. And we've been hanging out in this 217 to 218 handle for the better part of the entire session. So price discovery happened very quickly on this one. We didn't get any chop on the conference call. It's just been hanging out up $10 here. Obviously, you're going to get some more volatility when the real money comes in at 9:30, because we know a lot of institutional action doesn't trade after hours, or they just choose not to, not that they can't. So I don't know, but the big moves happened. It's up $10.
Yeah, but look at that. Look how quiet it has been. You mentioned
Very.
that. That's crazy.
It was a quiet after hour. So, okay, I'm looking at my list, and we're going to bring this back, but just because you mentioned quiet, so I have to take you on this tangent. It was a very quiet after-hour session. I traded the whole session, but usually when you get Apple earnings and AMD earnings and EA, and you got 100 companies reporting basically after the bell, there's lots of fireworks, there's lots of volatility, lots going on. It was very quiet. The S&Ps were quiet. Apple had its move. AMD had its move. But after that, it was just like after like 5:30, So, an hour and a half after all these earnings were out, it was just crickets. There wasn't much movement. There wasn't, a lot of earnings later than that. So it was actually a very quiet session.
Yeah, I'm just going to go with this pre-market high, and bulls and bears are just squaring off here at 218.30. We've hit that multiple times. You're a buck away, so I think you got to get rid of that seller there, 218.30. Then maybe you can look for the whole number 220. On the downside, the bottom of this trading range has been 217. So breaks below there. I think I'm going to give it give a little bit back. But you know what? And correct me if I'm wrong here. You gotta have an iPhone to have an iWatch, right?
Huh?
No. Well, no.
Oh, to make it work, but maybe to get like all the capabilities of it.
Yeah, to really get the most out of it, you should have both.
Yeah.
But I don't think you need one per se.
So you could get rid of your phone and just have a watch, or not?
I'm not sure.
I think some. I don't. Can you have? You're asking is there cellular capability, like to actually answer the calls with your watch?
I don't think so. No, I think it would really work best.
Better.
It's meant to be used on top of an iPhone.
No, because I want to get rid of my phone. Get rid of my phone. Get rid of my car. Just have an iWatch and.
Well, eventually, if you're following Elon Musk, we'll just get a microchip in our head, and we won't have to carry anything. We don't have to worry about our cell phones or anything. We'll just get the microchip in our head, and when our head starts ringing, we answer our phone. We'll just do it all right through there.
Okay.
I think that's the way to do it. I think that's where they're going.
We're
going to become full Terminator here.
Sorry about that.
Bad tangents.
All right.
Okay, so Apple's up. Its story, is.
I tell you, 317, 318. I mean, that's
217, 218. Yeah, just 217, 218. Apple suppliers are all slightly up. Didn't get as much lift as I would have thought. LITE is bid up here in the pre-market. SWKS, I played that one off the report. It's up about $1 in the pre-market here. Cirrus Logic, I still have a small position in that one. Also bought that one on the report. CRUS. And then AVGO. Those are the four big ones I think about. There's obviously other suppliers as well. AVGO is trading up $1.50 on it too. Notice I left out Qualcomm because yes, Qualcomm is a supplier, but I still think that Apple doesn't like Qualcomm, and I think they're going to cut them as soon as they possibly can. So that's just my own thoughts. But Qualcomm's up a little bit as well.
And also, don't forget Samsung.
Samsung reported last night, which is important too.
Trading in Korea closed down 2.5%. Revenue fell 4% on a year-over-year basis. So
Samsung traded down last night, opposite direction. That can hit the some of the parts suppliers a little bit, and then I don't know if there's some overlap there. I'm sure there is. And also, we got to go to the chips too, because you had the AMD report that's moving the chips all around as well. So you got a couple of conflicting stories here this morning, because AMD disappointed the street, and man, did they beat this up on the print. I couldn't help it. I did it, Joe. I had in my head, if AMD really pulls back, I've been seeing it again and again, just have your orders out there and buy the dip. So I had an order out there to buy at 31.10. I got filled on that opening bar. Threw up a little bit in my mouth as I watched it trade midway through the 30 handle right through me.
I saw that.
And then about a minute later, it's back up in the mid 31s. So I was like, okay, and obviously being the scalper that I am, and a little bit shell shocked that it traded 60 cents through my print in about 10 seconds. I ended up selling I was in the trade for a total, I think, about a minute. It felt like an hour because of the fall that I took, but it's a little bit, you get in there and you get your feet wet in the initial bar, and it feels like it's not like my normal trading. We know I'm like a base hit trader, and throwing it out there and buying on that initial dip, a little bit scary.
Why 31.10?
I just figured 31. I had in my head $31. I figured that was a big enough move down. That was a $3 move. So I just kind of had it, and the expected move was less than that. It was beyond the expected move at that point. It was fall. I didn't have it out there right off the hop. It started falling. I'm like, okay, this thing gets near 31. I'll buy some. So I bought, I believe it's 31.10. And then, like I said, it traded right down. How low did we get? Like 30.60, I think.
Yeah, you did get to 30.46.
Yeah, all in that like a literal 5 seconds after I 31.10, it was still falling. So I tried to catch the falling knife. Obviously, it was down 60 cents, so a little bit piercing your hand there. But like I said, it was back in less than a minute, and it was trading back up in 32 handle. probably 2-3 minutes later. Really, really chopping around on the initial number.
So I'll give you the numbers. The second quarter, it was fine. They made 8 cents per share. Sales $1.53 billion. Both of those are in line with estimates, but the sales guidance was light. Q3 sales guidance from AMD, 1.75 to 1.85 billion. 1.95 billion was the estimate there. So light on the Q3 sales guidance. That's the reason for your hit, and it overrules what was a fine second quarter.
It has calmed down a lot this morning. We had the initial spike down, which was over 10%. And now we fall in that expected move category. It's amazing how these expected moves, and I forget what I had it written down, but I don't have that in front of me now. What the expect? I think it was around 6%, if I remember correctly, 6 or 7% on AMD. It's amazing how these expected moves just seem to work, and the stocks overshoot them on the initial, but they seem to come back in a lot of cases where to the expected move was. Spinner was saying Apple is very close to the expected move here this morning as well. So, and it seems like they want to trade inside the expected moves. Straddle buyers never seem to be doing very well, at least not this earnings season.
Okay, still on AMD, there was a series of lows there at 30.80. So if we get back down there, there was 4 lows in a row right at that area. Your recovery high, 32, just under $33. Your recovery high was 33.25.
Yeah.
But I think ahead of that, I would set yesterday's close. What was yesterday? Oh, that's way up at 33.87. So that's going to be your major resistance there.
I mean, if it can get the losses back, but we've seen this earnings season, it doesn't seem to come back the first day. And Amazon is still leaking. Amazon obviously had a bad day there yesterday. It made a new low on the move yesterday, although closed stronger a little bit yesterday there. So it's on the watch list for sure. We know Netflix took about, after 4 days, it started to rally after the disappointment. So it seems like they're taking a couple days. They're not just coming in and buying off the initial print. Beyond Meat was interesting too. You know, if we just go look at the trading action in that, it got hit very hard on the initial, off the initial opening there yesterday after the disappointing earnings in the secondary. And then the stock rallied all the way up and tried to get to scratch. It was crazy. It got up like 217 and then leaked the rest of it away. So it seems like if you're coming in, I mean, maybe there's an initial pop, but it seems like that initial pop gets faded. I would just say maybe let the dust settle on AMD.
I agree. And it just seems like it's got over 34 like a few different times, and then man, it really can't hold it. So if it starts going in rally mode over the next couple days, let's see here, 34.77. That was the recent high of the move. But all right, let's move. Oh, Dennis, where do you find your expected move? Jar Jar is asking that.
Just add up the calls and the puts. So that's all. It's basic math. So if you want to just do like AMD, you could take in the 34, add up the call and the put for the weekly, and you'll get what the expected move was. So just add them up. So for the same strike. So if you go 34 out of 34 call, 34 put for the weekly, that'll give you your expected move.
All right, we're going to GE now. Joel, taking his cues from John Inch, told me at around, I don't know, noon yesterday, said I got a good feeling about this GE report. Well, they were right. GE.
John Inch had a good feeling about this GE report?
Yes.
Well, he published a note on that.
Yeah.
Right.
Yep.
And so GE they beat Q2 adjusted EPS 17 cents versus a 12-cent estimate. Sales 28.8 versus $28.52 billion. So a beat and a beat. They also raised their full year adjusted EPS guidance to a range of 55 cents to 65 cents.
Showing some life, needs to get up over $11. That's going to be the bogey here. The book is just littered with sellers everywhere, but it's already traded 8 million shares, so it can easily take out the 650,000 that are perched at 11. There's a lot more to take out, and it's amazing when the book does come into play, because the Procter & Gamble yesterday, remember, it was trading 21.10, 21.20 pre-market. I was like, this is going to struggle to open over 20, 120. And I said that on the show. It opened under 120. So their trade was short that pre-market and buy it at the open, and you'd been fine. Procter & Gamble did take it out in the regular session, but it's just difficult off the hop for them to take these out when you've got those big sizes perched. Now, this is a little bit different story with GE because it's traded so much volume. But again, I'll just say $11. Can it open over 11? I would think, maybe it opens at 11, but I don't know if it can open over 11. We'll see. Lots of time yet, though. 8:15.
Pre-market high is 11.17, so they snuck it in the 11 handle. Spencer, why don't you pull up the monthly on this one, because this is looking interesting here. You've been capped at 1072 really here for the last 5 months. Yeah, another high at 1129. This was back in February of this year. So on a monthly chart here, if we can close above this 1070, this has a chance for a breakout. I mean, I'm sure sellers are going to be everywhere, and just because it's such a thick stock, but just based on the monthly charts here, you could have a clean break. I'm not sure what the short interest is in this or not. I don't know if shorts are really going to be scrambling on this or not, but you've had a couple, perhaps the temporary low was in here that you made in December, and let's see if we could close at $11. That's a big number. I've already traded 9 million shares. So
I mean, you've identified the level, 1070 to 1075.
Yep.
We are at 1090 here in the pre-market. We still have a lot of time to trade here in the pre-market before you get to the regular session. Remember, most of your charts don't incorporate pre-market and after-hours action. So if for some reason this decides to open 1075 and start puking, that'll look like another failure at that 1075 level. And we don't look like have we been over 11 in the pre-market?
Yeah, we went to 1117. And I was watching
these big numbers. It's a tip for you pre-market traders. Same thing with Procter & Gamble. You get the big whole numbers and you're buying them above those numbers. It's a quick way to usually lose money. Procter & Gamble, everybody who was buying that at 121 the pre-market could have got that thing under 120 at the open. So you got to watch paying up for these, and they're going through these big psychological numbers because a lot of times they start to leak it back. And GE, we're seeing the same story here too. I mean, 11's huge too. So not only is 1075 huge, you get to 11, it's going to be huge too. But the way it's leaking here right now, you wonder if it can even open over 1075. We're going to see.
Did you watch this in the pre-market or the after hours at all yesterday?
It was trading up.
It was just there was a relentless buy.
Relentless buyer.
Yeah.
I kind of thought there might be. I took it home long. And you can always get out of GE after hours. So I had no intentions of taking a report. So I bought the close, which was like 1052. And then it was just getting bid up. And I thought it might get bid up after hours, people getting excited into the print. I sold it, obviously, last night and ahead of the print and made a little bit of money. And, and they're right. There was a relentless buyer there last night. But you're seeing that in a lot of bigger stocks. You see that. I don't know why it is. Maybe it's shorts are like, oh, I forgot to cover. I don't want to hold it through the print. Maybe it's, the longs that are saying I want to own it into the print. I don't know why you're seeing the buying pressure ahead of the print, but we've traded that for a long time. For years really, we've traded that. I've always talked about the couple day run up ahead of the print as well. You see that, and obviously it doesn't work in every single case, but it seems like if you put them all on, it seems like 55 or 60% of the time they work out. So in the long run, you should make money with that strategy, just buying ahead of the print, but not taking it through the print, like getting out before the actual print.
All right, let's move on here. I want to talk about Enphase here, ENPH, which we've probably discussed on the show a little bit, but not as much as maybe we should have. It is the best performing mid cap or large cap of the year. It's up like 400%. Wow. There's pull up a monthly.
Did they report?
They reported, they reported yesterday. I'll read you those numbers now. The Q2 EPS 18 cents versus a 13-cent estimate. Sales of 134 versus 120 million. Beaten to beat. I don't know what you can say about it. Like I said, it is the best performing mid cap or large cap of the year.
So, this stock's been a monster. I mean, this is a solar play, right?
Yep.
So, solar stocks have had a fantastic year. You can just bring up TAN and you can see it in that too. $18 to 28. That encompasses them all. First Solar, $40 to 66. CSIQ, you can bring them all up. CSIQ, $14 to 21. It's off the highs a little bit. SPWR has went from $5 to 10. It's been a fantastic year for solar. As bad as it's been for some of these oil stocks, it's been good for solar. You can clearly see the move to cleaner energy happening in the stocks themselves. I think this trend continues. So do I want to chase? No, but on buybacks, I like the solar stocks. Do I want to buy Enphase up here 25? That stock's up 400% in 7 months? No, but on pullbacks, I'm interested. And First Solar is one that I want. I've wanted this in my portfolio for a while. I'm kicking myself that I didn't buy it on the pullback back in December because obviously it'd be up some money now. But the solar stocks continue to perform. I just think it's this move. And, I look outside and I'm on the Great Lakes. I'm on Georgian Bay at my cottage. And the water level is so high. And it's not just here. Lake Ontario set records for high water. Lake Erie set records for high water. Lake Michigan, just slight, I think it's an inch or two below its all-time high. Lake Superior, Lake Huron, they're all right near their all-time highs, if not making new all-time highs for water levels. The reasons they're saying Lake Superior, excess rainfall, Superior's dumping it and it's coming down, and obviously it's got to get out and go through all these lakes and eventually out to the ocean is where it goes. But, there's also got to be some effects of, climate change here happening. And we're physically seeing it here now. I mean, you've got, marinas in Windsor that didn't open because their docks are underwater. And we're not talking, it's up a couple of inches. It's up almost 5 feet from where it was 5 years ago. The water level itself is up, like, not talking horizontally, like talking vertically, like it's up 5 feet in 5 years. That's incredible. It's went from the low end of the range to the high end of the range in 5 years. That cycle typically takes like 25 years. So I don't know why it came up so quickly this time. But even in the last few weeks, I still see it coming up. Usually by, and I know because I've been on the water, I've lived on the water my whole life. Usually by August, water levels are starting to go down. They're high in the spring and they're lower in the fall, but it's still coming up. So I don't know what's happening with the water levels in the Great Lakes, but it is an issue, a major issue. And you keep looking back and you think, okay, well, maybe we're starting to see some of these effects of, this climate change starting to happen in the Great Lakes. And if that's the case, that's a scary thought. And there's going to have to, obviously, it's going to start to get more, we got debates happening, and I'm sure they were talking about climate change on the debates last night as well. But I still think you got to start moving to cleaner energy. Oil, and we've been talking about that, and it's in the prices of the stocks, is not in favor, and I think for good reason. Dirty energy. Solar is a cleaner energy, so I think those stocks are going to remain in favor.
25.50, your pre-market high, and you are right there right now. So that's your target, or 26. Big move for it, up 380. Keep your eye on the pre-market high, just before that 9:30 bell, and really that's the only reference point you have. Traded up 380 at 25.45, just off the highs of it was made after hours, but right back up there again.
Let's move to EA. Now, this one was a little bit tricky because they had a couple of unique events in their quarter that factored into their earnings. But the big number for EA is their revenue for the quarter. Total revenue, $743 million versus $719 million estimate. So they beat that number. The Q1 GAAP EPS was $4.75, which includes some tax benefit adjustments. So like I said, the earnings are a little bit tricky there, but they beat on the sales. That's a big number, and the stock is up.
It's a nice pop on EA. Stock has not been performing well in the last few months, ever since we had that ridiculous rally, which we know when I'm talking back from the beginning of the year with the Apex Legends, when stock went from $78 to $110 in a matter of 3 days, I think. It's cooled off. It's a nice pop, but really since that, Apex Legends announcement, it's kind of been drifting down since. So I think you find some sellers in this. I don't own EA. It's one that I did own. It's one that I kind of still want to own eventually, but I haven't pulled the trigger on it. I said I'd rebuy it at 90. I did, and I probably should have. So at 94. But you got overhead supply here at 95. I look at this 95 level, Joel.
That's just,
it's a big number.
Yeah, it's a
opening into it. I think I'd fade this move.
Yeah, 94.85. That was a daily high that you had on July 11th, and then you went up and kissed that area this morning to 94.79. So 95 at big level, get through that. I'm looking for more follow through. If not, Street kind of leaning the wrong way into this report, making a monthly low yesterday. So I don't know. I just see that 95 sticking out to me.
I do too.
Yeah, so
I think, and I see some size even in EA, 94.45 in the pre-market on NASDAQ. There's 20,000 shares there. There's some sellers in this 94 handle, so I kind of like the fade. Kind of like fading this move. Just my thoughts.
All right, 825 here. As we mentioned at the top, there are a lot of earnings. We can go through our list, but if you have any specific ones on your list, drop them in the chat, and we'll try to cover them. There was one I saw earlier reporting, I believe, tonight, and that is Western Digital. They're tonight, right?
Yes, they are.
So let's look at WDC ahead of this.
Been such a run, and obviously going to be priced in a lot of, AMD, same story. Were the earnings that bad? Probably not. The stock's just been running for the last few months from 26 to 34. So really priced, not exactly for perfection. I mean, it's not right at the highs, but the bar is set pretty high for Western Digital here, especially since we've got some other chip earnings, and some of them were pretty good. I mean, Micron was running, but a different story. It's more DRAM. But Western Digital, WDC, from 35 to 56 in the better part of a month. That's a big run. I will say the bar is set high for this one. I've sold my Western Digital. Did I sell it all? I might actually have a little piece left. I can't remember if I sold it all or not. But anyways, I had it, sold it because I just thought the run was too much, too fast. Regretting that because it's continued to move up. We'll see. But I think the bar is pretty high for WDC.
Yeah, 57.86 was your 5-day high. So another high in the upper 57 handle. You're fucking a half away from that. So if you're looking for a place to lighten up here in a potential rally, I'll be looking at that. On the downside, pair of lows here. Let's just call it 54. Let's call it 54.75. I see 3 out of the last 7 lows at that area. So under 54.75, you got perhaps a $2 drop to 52.82. Pretty wide area, but we'll see if it's range bound ahead of the report.
Also reporting tonight, if you want, Qualcomm, Twilio, Lam Research, Cognizant. There's a ton of stocks. Like I said, there's 200 stocks reporting between this morning and tonight, so there's a ton of them. Other reports here from this morning, though, which there was some big ones, and from last night, which we haven't touched on yet either. FireEye. I mean, this one continues to remain out of favor. Stock falls $1.85, another 11% on its earnings. Goes from basically giving back its entire 2-month run in one print. So, I mean, there is some support down here at 13.85. Spencer, give us those numbers, FEYE. What do they say to knock this price down 11%?
Adjusted EPS, they lost a penny. They were supposed to gain a penny, so they missed it by 2 cents. Sales, $218 versus $215 million. So they beat on the sales number for the second quarter. The guidance, however, was light. They guided a EPS range for the current quarter of 0 cents to 2 cents. 7 cents was the estimate there. Sales guidance also light. They guided a range of 217 to 221 million. 228 was the estimate on that. So light on the Q3 guidance, and then on top of that, light on the full year EPS and full year sales guidance. So light guidance across the board.
You talk about best of breed and worst of breed. FireEye has been worst of breed forever. I mean, think about what these cybersecurity stocks have done. Like, look at CYBR, one of the best ones. From 2018, this went from 40 to 140. Palo Alto Networks has went from 140 to 230 in the last year and a half. Symantec, which obviously had the bid, hasn't performed as well either, but it had that bid, which helped it for a bit. But it's still up. It was down, actually, it's kind of flat, so it hasn't done well either. And then FireEye was $16 back at the beginning of 2018. It's $14 today. So if you own these stocks, it's clear that CyberArk and Palo Alto Networks have been in favor for a long time, been performing for a long time. This stock has just been a perennial underperformer. It's been the dog of the group. I don't see a reason why that changes.
Back to the bottom of the trading range for FireEye here. You were at the top of the old sleepy range there, and now you're at the bottom. You did have a low here at the end of May at 13.85. You did pierce that by a decent margin here. You went down to 13.11, but that was not a lot of volume. Did not trade down there when it went to 13.11. So bottom of the range, 13.85. We'll see if we get there today, and then take a long way to recover to get back to the top of the range. Street leaning the wrong way into this report. We'll see what happens if it can hold support at 13.85.
Let's talk Spotify just before we get
Sure.
to the 8:30 imbalances here. Their report was mixed. Q2 EPS for Spotify, a 47-cent loss versus a 35-cent loss estimate. So they missed that number, but they beat on the sales, 1.85 versus 1.84 billion dollars. Total MAUs, monthly active users, up 29% on a year-over-year basis. They're now at 232 million MAUs, And they gave some Q3 and Q4 sales guidance. It's in euros. I'm not going to bother converting that for you right now, but it was okay.
So this stock was trading up $5 ahead of the report last night. Those people obviously were wrong. Stock's now trading down. So if you're looking at, the prints from last night, it wasn't reporting last night. It hasn't leaked. It literally just people were paying up last night ahead of the report. And now it's trading down $10 from where it was last night. It'll watch us paying up. Like I don't understand these people that come in and they pay up $5, $7, $8 ahead of a report on a stock, because you're giving up so much edge, in my opinion. And sometimes, like I said, I'll even short those when a thing's up $5. Give me like a 5-point lead into the report. I didn't do it in the case of Spotify. It's a little bit of a wild child for me. I didn't want to be short in the report, but sometimes I will. If I see the thing trading up $4 or $5 ahead of the report, maybe it's a case where the guy knows something, and then you're obviously going to probably lose money. But in some cases, I think people are just excited and they want to own it. They think the report's going to be really good, and they forgot to buy it. And they're coming after hours and they're buying it. And if it's giving you a 4 or 5 point lead, sometimes it's a good thing. And in this case, it would have worked if you were shorting to the people who were too excited that they had to own it into the report.
And it's trading down. You really traded that high. Wow, I see that.
It was up $5, and it was bid up there. Like, it wasn't bid 160, but there was like 158, 150. You could have easily got 157 to 159. So the 160 might have been tough. It might have just been one print, but the 157, 150, it was trading up the entire session.
And that's strange, because you had a bunch of highs at the 156 area over the last 3 out of the last 4 sessions. It's called 156.40. So you were buying it above that series of highs. Can't really see much at the pre-market low. Your pre-market low comes in at 147.22. And for me on the charts, I see a low in that area, but I think my better area of interest would be under 144. I see 3 lows between 143.59, 143.82. So let's just split that. I'd say 143.75 is your major support if in fact you take out that pre-market low.
If you want to look at imbalances, a couple of interesting ones. One interesting one here is Procter & Gamble has 160,000 to sell. So that's why it's trading down 50 cents steadily here in the pre-market, because that is a big sell imbalance for PG. I mean, the thing's traded 4,900 shares, has 160,000 to sell. That's worth going and looking at the book, because sometimes you can see these imbalances, like the actual order in the book, and sometimes just like one person. And maybe that is the case. I see 120.25. So that would factor in 43,000 shares to sell just there. So that would factor into it, because that's below the closing price of 120.41. So there's another 14,000 at 120.30, another 10,000 at 120. So that adds up to about half of it. The other half must be made up of like market orders. I don't see it in limits or opening orders here. So, actually, in market orders. So it looks like it might open below 120 here.
Yeah, and all-time closing high yesterday, 120.41. So that's a mark some people will be keeping an eye on. As far as looking for like major downside in this issue, 118.80 was your low from yesterday, and you got a gap down. But yeah, that's your number. I mean, that that's your earnings day low so far. So until it breaches that, I mean, Procter & Gamble, great performing stock, and
I like that number.
Yep. And if you're looking for a little resistance, I mean, why not look at the all-time closing high, 120.41? That's $1.30 off the all-time high at Procter & Gamble, 21.76. And surprised they're not coming out with like a split or something in this stock. It's about over 100. I guess it's not.
It's not the cool thing. You don't see a lot of splits anymore. The companies aren't splitting their stocks. It's cooler to have a high-priced stock. You just don't see it anymore. That was a thing back before, and I guess in the 20th century, they all wanted to split their stocks all the time. The 21st century, it's not the cool thing to do.
All right.
200,000 to buy. Pfizer, 50. Pfizer's an interesting story too, because it's just been hit so hard. 57,000 shares to buy in Pfizer. ConocoPhillips, or not ConocoPhillips, Capital One, COF, has 58,000 to buy as well, and it's popping a little bit after it got hit really hard yesterday too. So a bit of the fade trade on this morning. But yes, fading yesterday's moves.
All right, 8:35. Let's take a quick break and grab today's guest, Mike Olson. managing partner and senior research analyst of Piper Jaffray. He will break down Apple for us. We'll be right back in a moment here with Mike. All right, welcome back, everyone. Pre-Market Prep, Spencer Israel, Joel Elconin, Dennis Dick, joined now, as I mentioned, by Michael Olson, Senior Research Analyst and Managing Director at Piper Jaffray. Mike, how's it going today?
Going well. How are you?
We're going well. Busy morning. Obviously, a lot to discuss. We've got the Fed meeting, which we haven't even gotten to on our show yet today. But let's talk about Apple here. I guess, high level, what was your reaction to the report?
Yeah, it was a solid quarter across the board. You had just from a top line perspective, revenue beat, EPS beat, every other key metric as far as kind of the revenue segments and margins were either kind of in line or just slightly below or above expectations. So I would say the biggest surprise was probably the September quarter guidance, which includes revenue that's about 3% above where consensus was, and gross margin was also fractionally above for the guidance. I think really the conclusion here is that Apple's doing a good job of building a bridge to kind of, their next major catalyst, which is the launch of 5G iPhones in the fall of 2020. And that's really being done by Apple continuing to show strength in non-iPhone segments, as well as driving some improved performance in iPhone, despite the lack of any exciting new hardware right now.
So China sales fell on a year-over-year basis, but Tim Cook specifically highlighted that, I believe, on the call. What should we take away from how they're doing in China?
Yeah, so if you look at mainland China, sales actually grew, and then Greater China, it fell. I think the point, though, is that on a year-over-year growth basis or year-over-year decline basis, as the case may be, things are improving. And some of the things that Apple's doing as far as tactics to incentivize customers to buy iPhones and other devices, as well as some of the, local items like changes to VAT and things like that within China have helped to some degree as well. So demand has improved, still not where they'd want it to be, but it's definitely improved. And again, there was growth in mainland China.
What about the services revenue that was highlighted as, being at an all-time high? That's been long discussed as Apple's future. How, I guess, all-time high is obviously great, but are they there yet as far as where they want their services to be?
Yeah, they're definitely getting there. I think when you look at services, it's starting to get to the point where it's getting really big enough to matter, in the sense of it's a real, material part of the business now. Services is 20% of sales this quarter, and we think that it's going to be 20% of revenue and growing next year into the mid-20s over the next few years. So with a services gross margin that's in the mid-60s, that really helps to drive just improved margin profile for the overall business. And services margin in the quarter at 64% was definitely better than what most people were modeling. So we're seeing good progress there, and I think that one of the things that helps services revenue is definitely more hardware sales, so a larger ecosystem of devices in which to sell services. So as we see potentially an uptick in iPhone sales as we get into 5G, like I mentioned, next year and into the following year, that should help services as well.
Good question from our chat here. How does Apple plan to sustain their services revenue increases if their hardware growth slows down?
Yeah, that's kind of what I was just mentioning, is that basically you do need the ecosystem of hardware to continue to grow in order to sell services into. And so our expectation is that iPhone will reaccelerate in fiscal 20 and especially in fiscal 21 and 22 as we see probably a multi-year kind of upgrade cycle towards 5G. And given iPhone's the largest component of that overall hardware ecosystem, that should help services to some degree as well.
And following up on Mr. Mapp's questions here, plus they're likely to run into some antitrust issues with the App Store, and I think that the antitrust issues apply not only to Apple but some of the other of these stocks. So hard to comment on something that's broad, but how do you see the antitrust issue affecting Apple moving forward?
Yeah, I think it's probably pretty minimal impact, and the reason I say that is because they don't have a monopoly in smartphones. In fact, they have, in a lot of markets, their market share is behind Android. So I don't think it'll end up being a significant issue for Apple. As you look kind of more broadly at big tech in general, I think the things that certainly the general public would like lawmakers to focus more on, it relates to data privacy and election tampering and things of that nature, and less related to, does Apple have too much control with the App Store, with the iPhone or other items.
And, a lot of comments over the years with Apple is, man, they got a lot of money, but they really don't spend it. I mean, they used to buy back their stock and a small dividend here, but they did make that deal with Intel. Comments on that, and then going to be spending some more of their cash here in the upcoming year or so, and if so, what would they be looking for?
Yeah, so they have $102 billion of net cash, and they've indicated they'd like to work that down to zero in the coming years, which is a good problem to have. I think the majority of that is going to continue to come from share repurchases. In the quarter, they repurchased $17 billion of stock, and they have a significant amount remaining on their buyback authorization. And they will probably do periodic technology acquisitions that are relatively small. And I guess, this Intel deal, it's all relative, but even though it was $1 billion, is relatively small in the context of the $102 billion of net cash that they have. So I would expect more like that, but I wouldn't expect them to do some sort of larger acquisition in the tens of billions or anything of that nature.
Mike, what didn't you like from the report and/or call?
That's a good question. I think in general, we're just going to continue to see kind of a less exciting iPhone number over the next few quarters. And so that wasn't different than what we were expecting. iPhone was slightly below consensus, but it's just going to be kind of an unexciting iPhone period here for the next few quarters, again, as we kind of approach 5G and investors begin to focus on that. So I think that's, the only real disappointment here is just that we kind of have to wait a few quarters before things get more exciting again.
And you still got to buy?
Yep, we have a buy rating on Apple, yes.
What's the price?
And a $243 price target.
What about the suppliers? Do you follow any of those, or how does this impact, down the supply chain?
I really don't follow any of the suppliers, so I probably can't comment as much on that.
All right. I want to also ask you, you cover EA. They had their report here. We already talked about it from a technical perspective, but thoughts on the EA report?
Yeah, for EA, expectations had gotten very low, so an upside quarter for June and then unchanged full year guidance appears that it'll be enough to get the stock moving higher today. Upside for the quarter was primarily from their live services segment, which was mostly due to FIFA Ultimate Team and Apex Legends. And then they reiterated their guidance for Apex Legends to do 300 to 400 million in revenue this year. And the company also indicated that they expect this to be a growth title in the future as they release more content. With the maintained full year outlook and having beaten the the June quarter, they ended up lowering guidance for the September quarter. But the company said on the conference call that that's really more a function of conservatism than anything else. So in general, it appears that EA has shown that Apex Legends continues to produce results that are, at least in line with expectations. And FIFA, which is the company's largest title, is growing again. It was up 11% for FIFA Ultimate Team year over year in the quarter. All of this should help give investors a bit of a renewed sense of comfort around the name.
What about ATVI here? Kind of the dog of the group.
Yeah, it's been a challenge for the group in general and Activision in particular. I actually think Activision is probably the best name of the group from a little bit longer term perspective. And the reason I say that is because Activision actually has the best pipeline for 2020. In particular, Activision's going to have a World of Warcraft expansion. They're going to have a couple new mobile titles. Obviously, they'll have the usual Call of Duty release next year, but they'll also potentially have Diablo 4, which is a game that a lot of people have been waiting for, both gamers and investors. So I think Activision, despite the lack of catalysts for the company in 2019, as we get closer to 2020, there's kind of a catalyst path that investors may start to catch on to, and that could cause the stock to begin to move higher as we approach those catalysts in 2020.
And Amazon here didn't like it after the report, trying to recover off that. Quick comments. What I like to do a lot is keep an eye on that earnings day low. That earnings day low was, I believe, 18.9. No, where was it? I think it was, what day did it have the big fall? 1924.51. We are now under that. We're going to get to see Amazon maybe get a chance to buy it back at 1850, 1860. What's your outlook for him?
Yeah, I don't know where it's going to bottom out. We would be buyers of it here, and that's largely because we just believe in multiple catalysts for the company going forward. But I think if you look at the quarter itself and why some people maybe didn't like it quite as much, it has a little bit to do with a shifting of the balance back towards growth and away from profitability. So you have one-day shipping that kind of weighed on op income and boosted the top-line metrics. It drove 18% year-over-year unit growth, which was a 8 percentage point improvement in unit growth. And then AWS experienced a bit of lumpiness. And they're spending more on hiring salespeople for AWS. I think when you look at the difference there, the positive of one-day shipping spend is kind of instantaneous because you see it in the results immediately. Whereas with AWS, hiring salespeople takes several quarters until they become revenue generating, and so it takes a while to experience the positive of that spend. So the good news is they're investing in the business, which should drive improved growth in various categories, whether it be retail or AWS or other over the next several years. And that's the primary reason that we continue to like Amazon here.
All right, one more for you. Boy, I wish I would have listened to you on this one. C Limited. SE, I know if a few of our chatters have talked about it, is above your price target here of $35. What an incredible performer this year. It's above the target here. Just any thoughts on SE?
Yep. So Sea Limited continues to be one of the best names to play Greater Southeast Asia growth for both gaming and e-commerce. And the company's internally developed game, Free Fire, continues to be ranked #1 in many markets, both in Greater Southeast Asia and Latin America. So that continues to perform well. And then on the e-commerce side, the company really grew that business by initially not really charging sellers on their platform any take rate, but they've started to increase the take rate that they're charging to sellers, which has driven revenue growth for that business. And at the same time, hasn't really had as dramatic an impact on GMV growth as many expected. So, like to the negative side. So that's been a positive. So in general, we continue to see here and continue to see it as a great play on, again, growth of e-commerce and gaming within Greater Southeast Asia.
Mike Olson is the Managing Director and Senior Research Analyst at Piper Jaffray. Mike, as always, thanks for the time and have a good one.
Thank you. You too. Bye-bye.
All right. 8:51 here, Joel. Where are we at?
We're quiet. We're just hanging out at 3018. That's up 5 3/4 handles. Apple's got a little bit of the leak going on here. We mentioned someone was making a stand at 218, and they were just out there peppering bids. The bottom of that trading range here was 217. We've pierced that now, trading at 216.60. So it looks like you got a little leak going back up and reinforcing that 218 level if we do get back up there during the regular session. Let's take a look at Humana, HUM. We have that trading up just $17.50 here.
No big deal.
What a stock that's been. We want to talk about good stocks from the last 6 years, and we've given love to MasterCard and Visa, and there's been a lot. But I mean, these healthcare stocks have been unbelievable performers too. Humana was $65 eyeballing at the beginning of 2013, $300 now. So just an incredible performer here as well. I can remember my one buddy, give him a shout out, Chris Banya, who's an excellent investor. He was the one that told me about MasterCard back in 2011. He's like, you got to just load this thing up. It's going to go. He was also talking about the healthcare providers and UNH and Humana and all of those as well. And he was dead right on all that. Get Chris on the show sometime. That guy's just good.
He's your friend. Bring him on.
I know. We got to bring him. We've had him on the show a couple of years ago. We had him on, so we got to bring him back. Though.
All right, I'll read you the Humana numbers. The Q2 adjusted EPS $6.05 versus a $5.30 estimate. So a nice beat. Sales $16.24 versus $15.93 billion. So very nice beats for both EPS and sales in the second quarter. They guided their full year adjusted EPS at $17.60 or somewhere around there. That's also a beat. So they beat across the board.
Stock is off its all-time highs. I mean, we did get up to 355, so it's been on the little comeback trail here. I don't know what to say. I hate chasing. You know me, if you listen to the show for any prolonged period of time, I don't like chasing moves. I like buying stocks when they're up 17 points. But the report's good. I mean, on a pullback, maybe it gets interesting here. I can't bring myself to chase it and buy it up 17 though.
Yeah, well, what about chasing it at 308.89?
That was higher this morning.
Yeah, that was a high this morning. So, I mean, you haven't been over 300 in quite some time. So,
go look at the book.
Yeah. I mean,
there's something perched at 300. Let's just go see if there's anything.
I mean, it's going to have to take
4,300 shares. It's not much. He's only trade 11,000 shares there this morning, but that's pretty small.
Yeah,
Let's go look at the imbalance. It's just all math. Trading is just math, guys. HUM, 19,000 to buy. So that's based off the 284. So I can see, actually in the book, you can see 325. Somebody's buying 15,000 shares. What that is called is a marketable limit. And they're like, I want in on the opening print no matter what, because they're fairly confident it's not opening up at 325. So they throw it, up there, and 15,000 to buy is significant. So the bulk of that imbalance is actually one order at 325 for 15,000 to buy.
And just longer term, keep an eye on that 309 area. Your yearly, not your yearly high, but that was your January high, and then your February high was 312. So that whole 38, 310 area as resistance. On a pullback here, I don't know, under 300. I mean, where are you gonna, lean on to get, to cover yesterday's high? Exactly where it closed at 284.52.
All right, let's just talk for a few minutes about 2 o'clock today and what is going to happen at 2. Well, not so much what's going to happen, but what the market reaction will be. Was it Dennis that said the other day that you could have the FOMC decision in your hands right now?
You don't know how to trade
but
it.
You wouldn't know how to trade it.
Yeah, I think so. I think if if there was an insider there that actually had the decision, they knew what they were doing here. I don't like there's going to be a head fake. There's going to be some wild trading action. Are they going a quarter or are they going a half? That's pretty much the question. Obviously, they were still saying there's like a 25% chance that they go a half. I don't think they're going to go a half, but this Fed's pretty crazy. It would not shock me either. And if they go a half, how does the market interpret? Do they immediately interpret that, okay, this is what we wanted was easy money. This is, what we got it now. We got a half. Or do they interpret that the Fed is reading, tea leaves that we're not reading, that they need to go a half? So the interpretation of this is going to be very interesting. I think everybody knows they're at least going a quarter. So they go the quarter. Probably scenarios they go the quarter. The most probable scenario is they go a quarter and they remain dovish. How is that interpreted, though? So let's just say they go with the probable scenario where they cut by a quarter and they do remain dovish. What is the market's reaction to that? I don't know either.
I'm just astonished that the quarter is even on the table.
Wait.
I know we've said that for a long time.
More specific,
but
it's more specific. You say they remain dovish. How many rate cuts is that? How many rate cuts?
I don't know, but when you're comparing rates, and I've seen lots of stuff fly by my Twitter stream here in the last while. I mean, the U.S. rates are very high relative to the rest of the world. They're high because they can be, though. I mean, why take your bullets out of the chamber just because the rest of the world is not doing as well as you? I mean, I think the U.S. economy is kicking butt right now. So I don't understand why we need to start lowering because of Europe or because of China. Let's worry about us, and Trump almost, Trump's the one that toots the horn and says how good the U.S. economy is, but then he's also saying we need to cut rates. I mean, those two are completely conflicting with each other. That viewpoint that, we need to cut rates, but, we have the best economy in the world. So I agree with them. I mean, the U.S. has been the best place to be for a long time. I still believe that's a lot to do with Silicon Valley and the growth in technology. And obviously, a lot of the big technology companies come from the U.S. But I don't understand why you need to cut rates when you're strong. Yeah. So I don't know what the reaction is going to be. The bottom line is, I think they're going a quarter. I think they're going to. This is what I think is going to happen. They're going to go a quarter, and they're going to remain dovish. And I don't know what the reaction is going to be to that. And that's uncomfortable. I mean, as a trader, I'm very uncomfortable with that I have, a pretty good, feel of what they're going to do, and I don't know how to trade it. And maybe Char help us out here too. I don't know what the reaction is going to be to it. It's going to be a reaction though. And the banks are obviously going to have a reaction here too. I mean, I don't think there's no way they go quarter and then go to a neutral stance.
I kind of agree with Mary Miller here. She's saying that they won't remain dovish, and I think they'll do the quarter and say, we're going to wait for more data.
Well, they're going to say that, but
yep. So
it's all about the tone, right? So if they go a half, scenario, they go a half.
Then everyone's going to freak out. Did they know that the economy is going in?
Do they rally the hell out of it? I think a lot of people would say they're going to rally the market if they go the half. I don't know. I'm not sure. I think they go the half. I think the banks get whacked on the initial headline.
Why
so
the banks
if they do go the half?
This is such a dovish environment. Why are the banks? You talk about the if this is everything is so dovish and everything. I just don't understand the breakout in the banks.
But the banks have been strong.
Yeah.
I mean, Bank of America in the last month and a half has went from 26, and really, you're right. The banks have performed. Banks have been underperforming forever. They've had a really good month and a half here. So if, the Fed is going to remain dovish or, continue to be in a rate cutting environment, it's not good for the banks. So does that mean you want to sell the banks ahead of this? Or does that mean that maybe you're right? Maybe the Fed is going to go neutral. I don't think so, though. I think they're going to remain dovish because I think there's too much pressure, political pressure, for them to start looking like a neutral stance or even turn hawkish. I think they're going to remain dovish. I think they're going a quarter, and they're going to hint to more rate decreases in the future.
It's all contradictory. Nothing makes sense. I think
nothing makes sense.
I think what sums it up.
Logic.
I think what sums it up is the Goldman note I saw yesterday, or maybe it was the day before, and the headline was I'm paraphrasing here, but the headline was something like slowing profits, raising targets. That's what it was. It's profits are slowing, and we're raising our targets for the year. It's just nothing makes sense. That's the way it is. So.
That's the way these markets are. It's a difficult market to make sense of. I mean, even the earnings season, we've seen some pretty good reports, and we've seen stocks get hit on them. And then we've seen a few reports that weren't even that great, and stocks hold up. So it's all about expectations going in. The expectations are a little bit mixed going to this Fed number. All we can promise you is that I think you're going to see some pretty good moves here after 2 o'clock. So watch out for the head fakes.
All right, I think that's a good place to wrap up today's show. Thank you to our guest, Mike Olson. Thanks to everyone in both of our chat rooms on YouTube and premarket.benzinga.com. Please remember, all the information from our show meant to be used as informational purposes only, not for investing or trading advice. You can catch our podcast available on iTunes, SoundCloud, Stitcher, TuneIn, Google Podcast, Spotify, or rewatch us on youtube.com/Benzinga TV. Everyone have a good day. Good luck out there. We will see you on Thursday.